Hey there, traders, and welcome back for episode 119 from the StockBandit.tv. It's a place you can always find trading videos to make you better. And on Sundays, you typically will find market view videos like this one and take a look at the major indices and get some, clear-cut levels to be watching in the days ahead. Now, last week, there was no free video here. I apologize for that. I was doing some traveling and out on kind of a long weekend type of vacation, and anyway, I was running short of time, and anytime that's the case, I always let the free stuff go first and tend to the members over at the StockBandit.com. So we are back on schedule this week, and you can expect to see more free videos going forward. Now, taking a look at the indices here, we have seen this market continue to rally off of the February lows. So take a look at the NASDAQ here. The initial bounce was okay, but it was met with some skepticism here as we saw the market just kind of grapple with a very short-term trading range here. It really struggled to gather some momentum. But over the past 6 sessions, we've seen this thing just continue to ramp higher. Take a look at these green bars down here. These are the volume bars. And you see we have 6 straight days in a row of gains, 6 straight sessions. So obviously last week was a 4-day week. So we had Tuesday through Friday rallies last week, and then the prior Thursday and Friday as well. So we have now seen the best levels now off of this correction from the January high. So we sold off from these January highs, marked a low a couple of weeks ago, and we've been rallying steadily since then. At the same time, we've seen persistently light volume. All of this volume here in the last couple of weeks has been well below average. Take a look at this moving average and where these volume bars are. We really are seeing very little participation on the side of institutions. So the funds apparently are not making big strides here by putting a lot of cash into this market. But nonetheless, the rally is persisting. We are continuing to climb here, and we have reclaimed some important levels, and we've recovered more than half of what was given back here in this sell-off. Now, this index at this point is somewhat in the middle of no man's land, meaning there is not a real well-defined level close by. If we do continue to rally here, the next spot that I'd be taking a look at is the lower end of this trading range from January, and that's the 2269 level. So that's another 25 points or so from Friday's close. If we do happen to roll over from here and start to pull back a little bit, then this next level that I'd be watching is this same zone right here, the 2205 level. So those are kind of the next 2 immediate levels to be watching for the NASDAQ. But the biggest key here is this lack of upside volume on this V-shaped recovery that we're seeing, which makes this bounce very difficult to trust, especially as it's starting to get some short-term stretched here over the past few sessions. For the S&P 500, a little bit well-defined, interesting things taking place here last week. Obviously, this thing was up every day last week, including the gap that it saw to start the week. So we did see this index run completely higher throughout the week, and it ran right up to this 1113 area, which is interesting to note because that's a former key resistance level from back here during this trading range in November and December. Now, if we do see this index push on through that 1113, the next spot is going to be right here. That's the low end of this trading range from January, which is 1131. However, if we do see this 1113 area hold, then I would expect to see a test back of this 1084 zone, which is this support level down here. So, we're kind of caught between these 2 trend lines here at the moment. We're at the higher end of this range here, but here again, volume has been very weak on the upside from the February low. So it's looking like a bounce that's very difficult to trust, especially given the fact that short term it's been a straight up move, and therefore some profit taking could easily kick in the days ahead. For the Dow, just a couple of key levels here to watch as well. If we do rally a little bit further here, the 10,500 area was a resistance zone back here during November and December. If we do happen to roll over a little bit and see some profit taking kick in, I would expect to see a test of this 10,120 area. It's been serving as a key level on both sides of this market for this index in recent months, and that would be the next logical spot to see a pullback carry to. But here again, we've seen a virtual straight up move here off the February low, and the volume has been far from impressive, especially on the upside. So take note of the general conditions out there. This market could easily see a little bit of profit taking after a straight up move last week, and Friday's move with the indices only tacking on very minor gains may point to some short-term fatigue starting to set in. So we're going to watch that very closely in the days ahead. Thanks again for joining me for this video. I will be back soon with more videos, but in the meantime, trade like a bandit.